You've probably heard by this point about the explosion in success the video game Fortnite has had on a global scale in the video gaming market. Its attractive cartoon style, its wacky and silly dances, as well as the freedom the individual has in terms of what he or she can do in the game, has taken the world by storm. And with that, from the business perspective, they've been experiencing some strong financial metrics. Some recent data shows that near around April and May, the parent company, Epic Games, has been experiencing nearly $300 million in sales. What's interesting about this game, unlike other video games, is one, the game is free in and of itself, and the in-game purchases that you can make don't enhance your performance whatsoever. In other words, they're all for aesthetic purposes. So the fact that this company is experiencing such a high level of sales just for aesthetic purposes, for me shuts up the naysayers who say the game is experiencing 15 minutes of fame. There's a certain level of elasticity or devotion that gamers have to Fortnite, and the level of purchases people are having just towards aesthetic, I believe, resembles this. Being that this is an investment channel, we always look at what trends are emerging in the world and how we can get a piece of the action and profit off these trends. And you may or may not have known, but you actually can via the stock market. Tencent Holdings is a huge Chinese technology and media company that actually owns 40% of the parent company of Fortnite, Epic Games, which means 40% of all cash inflows that go to Epic Games, Tencent Holdings is entitled to. Of course, Tencent Holdings is about a hell of a lot more than just Fortnite. Tencent Holdings in 2017 experienced 237 billion in revenue RMB, or the Chinese yuan. Converting that to US dollars, that's about $34 billion in revenue. They are a diversified and conglomerate technology company that owns, amongst other things, not just video games, but social networks, primarily in the form of QQ, WeChat, and Weixin, which are the Chinese equivalents of WhatsApp and Facebook, for example. So should you invest in this company? Well, the reality is, if you want to invest in this company, you should do it on a belief further than just what Fortnite is. The reason is, if we input an average level of growth for Fortnite's top line sales, recent figures suggest they are expected to make $3 to $4 billion a year. If Tencent has a 40% stake in this company, that suggests they're entitled to $1.2 to $1.6 billion in revenue. Given that the company experienced nearly $36 billion in revenue and is actually growing, that are derived from Fortnite are only 3 to 4%. In other words, if the company is to grow, it's going to grow for a number of reasons beyond just what Fortnite is. The company is in somewhat of a bearish trend. If we compare its stock price year to date, it's down nearly 26%. Relative to other gamers, the big name players being Ubisoft, Activision, Blizzard, Take-Two Interactive, and EA, their stocks are up 54, 29, 20, and 7% respectively. So there has been a divergence in terms of direction of the underlying securities. However, the main reason that Tencent is down is not necessarily due to their underlying business model, but rather due to the regulatory environment and the broad Chinese market as a whole. Given that the broad Chinese market is down nearly 20%, it has pulled down, for the most part, all Chinese stocks, including Tencent Holdings, but also including big name players like Baidu, JD, and Alibaba. On top of that, another explanation for bearish sentiment regarding to Tencent is the Chinese government announcing they plan to investigate and potentially put a halt on the amount of gaming output Tencent plans to put out. Reasoning for this is the Chinese government saying there are potential health risks in regards to the vision and all these gaming platforms may have on the eyes of people. Obviously, because the company is highly dependent on video games as part of their business model, this would suggest that there are inherent risks should the Chinese government continue to go on in this trend. Q2 2018 shows revenue in the currency of the Chinese yuan in online games at 25.2 billion, whereas total revenue was 73.7. In other words, online games via its most recent filings make up 34.19% of its revenue streams. When we look at Q2 2018 versus Q2 2017, year over year its top line revenue is up 30%, with its gross profit up 22%. So although the company is a huge company by any metric, there still is a lot of growth left in this company's engine. Given the dip it's had in its stock price, on top of that the increasing top line and bottom line growth, in my opinion, Tencent Holdings is a buy and is undervalued. The company will continue to grow, and with a depressed stock price, whilst the number continuously hits earnings and revenue, valuation metrics will increasingly become more attractive. It seems it's only a matter of time before the market picks up on this and the stock begins to recover. We want to thank you guys for listening. We hope this video has been informative, and once again, happy investing.